Andrew, so if you're positioning on the long side, is this a tactical call, or would you reckon that there is a bit of a structural move with the Fed move, not just a move that is going to happen this week, but likely 2 or 3 other moves until December?
So this is a big event before, obviously, the U.S. elections, Niraj. So that's the next big call that we'll talk about, I'm sure, in the next few months. But for the Fed, it's really about whether it's 25 or 50, and the narrative around what he's saying in terms of ongoing rate reductions. I'm hoping that it goes for 50 to front end the kind of interest rate cycle. And I think that's what the market would like as well. I think we've gone past that kind of, is the recession looming, in terms of, in the next six months. But I think if he does 25, it will again raise that kind of fear that is behind the curve. And I think that's what the market is going to be focused in on. My view is that if it's 50, market's going to push higher till the US elections. If it's 25, I think it's already baked in, and I think there's probably more headwinds for the economy. So it's all about, do you get that soft landing or not? 25 says we're going to be in doubt. 50 says it's probably a little bit more likely.
Andrew, what does this mean for Indian markets? One space that FIs like has always been banks. They've been showing a little bit of strength, a little bit of a comeback in the last few weeks on the technicals. Do you feel like might be a good time to spur up buying across banking names on anticipation of foreign flows coming back in and just sheer underperformance?
Yeah, the underperformance has been hugely stark. I think we've all been kind of over the past year saying this is the time to look at banks, and particularly with the interest rate cycle starting to head down. And even if the RBI does nothing in October, I suspect they'll do something in December. And if you look at the 10-year bond yields, are at 6.7 now. So it's indicating all the factors are there for the RBI to be more dovish and reduce rates going forward. That should be good for banks. My fear at the moment for the banks is not necessarily just about the NIMs, but we're not seeing the government spending and private capex spending picking up as quickly as I would like to have seen, because that obviously they'll have a multiplier effect on the economy, and therefore earnings can be upgraded again. I'm not seeing that. So I think we're seeing a slowdown in the economy. We're seeing forecasts in the market come down from over 7% to as low as 6.5%. So that's a worrying factor when your valuations in the market are baking in a Goldilocks scenario across all sectors within India. So I think that's something to watch. But with this domestic money, I don't think it's really kind of playing out at the moment in terms of any fears of earnings downgrades or the fact that the market, if you take from April the 1st, is up about 12%. There's very little, to my mind, there's very little expectation that the market can move significantly higher from here.